Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks in the technology industry. Of course, this is a sector that has had a rough couple of months, but that can mean a great buying opportunity. Now, all 3 of these stocks have gotten ratings from the #1 rated analyst in the tech sector, who thinks that they all have double-digit upside potential. We're going to take a closer look at these companies and what they do, and see if other analysts agree. Just before we get into that, this is your friendly reminder that if you enjoy today's video, please make sure you hit that thumbs up button and leave your thoughts in the comments down below. I always love hearing from you guys. Now to start off, let me show you how I came across these 3 tech stocks. So for today's stocks, we're going to our top experts and picking the top 25 Wall Street analysts. Now, when we get to this page, it's going to show us the top 25 for all of the sectors, but we're going to go to the left here with our filtering options and look at technology. And in our #1 spot for Wall Street analyst in the technology sector, we have Quinn Bolton. Looking at his full profile, you can see he's 5 stars and is actually ranked #2 out of over 7,500 analysts with a 78% success rate and an average return of 44%. We can change our benchmark and time period here and look at 2 years and compare it to the S&P 500 and see that he still has an average return of 47.7% above that. So we're going to look at a few of his recently rated stocks from this list over here today. So from that list of companies, the first one that we're going to take a closer look at today is Semtech Corporation. They trade under the ticker SMTC and are currently priced at $66.01 per share. And on the TipRanks Smart Score, they have an 8 out of 10 for an outperform rating. We have seen some decreased hedge fund activity and insider activity, but very positive TipRanks investor sentiment along with news sentiment. Semtech Corporation is the leading supplier of high-performance analog and mixed-signal semiconductors and advanced algorithms. They design, develop, manufacture, and market a wide range of products for commercial applications, the majority of which are sold into enterprise computing, communications, high-end consumer, and industrial end markets. Their solutions are used in some of the most innovative systems and products available. More than 5,000 customers worldwide rely on their diverse product portfolio and world-class technology roadmap for solutions in low-power wireless communications, optical data transport, video broadcasting, power management, circuit protection, touch sensing, and more, making Semtech one of the most balanced semiconductor companies in the industry. One of their big focuses is LoRa, or long range. LoRa is a spread spectrum modulation technique derived from chirp spread spectrum technology. Semtech's LoRa devices and wireless radio frequency technology is a long-range, low-power wireless platform that is the de facto wireless platform of the Internet of Things. LoRa devices and the open LoRaWAN standard enable smart IoT applications that solve some of the biggest challenges facing our planet, including energy management, natural resource reduction, pollution control, infrastructure efficiency, disaster prevention, and more. They're also collaborating with Intel on LiDAR technology. Semtech's advanced laser drivers and programmable transimpedance amplifiers are integrated into Intel RealSense LiDAR camera L515, enabling the creation of a market-leading, power-efficient, high-resolution consumer LiDAR. Now, just at the beginning of June, Semtech shared their latest quarterly earnings report, and their results came in ahead of analyst expectations. The company reported earnings of 53 cents per share, up over 51% to the prior year, and beating analyst expectations of 52 cents per share. Their net sales for the quarter came in at $170.37 million, up 28% year over year, and also outpacing the street's estimates of $164.31 million. They also boasted record quarterly bookings, including records for their LoRa platforms, Tri-Edge, and broad-based industrial protection devices, and repurchased over 360,000 shares for $25 million. Now, we know that the #1 rated analyst Quinn Bolton rated this stock a buy, and his price target of $86 would represent a 30% upside potential from their current prices. So, do other analysts agree? In this instance, they sure do. The stock comes in as a strong buy with 9 buy ratings and 1 hold. The average upside potential is right in line with Quinn's price target with a 29% upside potential. We have a hold on the low end with still a 7.5% upside, And on the high end, we have a $96 price target from Stifel Nicolaus, which would be a 45% gain potential. The second tech stock recently rated by Quinn Bolton is Ambarella. They trade under the ticker AMBA and are currently at $96.85 per share. On the TipRanks top smart score, they come in as a neutral rating with a 7 out of 10. They've also seen a slight decrease in hedge fund activity and insider activity, but also have very positive news sentiment as well as TipRanks investor sentiment. Ambarella is an AI silicon company. Their products are used in a wide variety of human and computer vision applications, including video security, ADAS, electronic mirror, drive recorder, driver cabin monitoring, autonomous driving, and robotics applications. They enabled the first full HD solid-state pocket camcorders, bringing high-definition video to the masses, and their compression excellence made them the #1 encoding solution for the broadcast market, with a majority of all broadcast television passing through their chips on any given day. They also helped create the sports camera market with the iconic GoPro Hero line, and have equipped over 20 million dash cameras globally. They have over 800 employees across the globe, with 81% of their employees being engineers and about 69% of those engineers being focused on software and algorithms. They say that they address the edge endpoints of the IoT market. The IoT endpoint market, the foundation of the pyramid, requires a fundamentally different SoC architecture versus the server-based network edge and data center layers. Ambarella is focused on IoT endpoints where low power, highly efficient processing, low latency, and improved privacy and security are critical. IoT endpoint market is a high volume and diverse market. Ambarella also shared their most recent quarterly earnings report at the beginning of June. Their revenue for their first quarter was $70.1 million, up 28% from the year-ago period. Their net loss per share narrowed to 30 cents in the quarter, compared to 45 cents in the same period a year ago. Hearing from their CEO, they said that their automotive business, led by CV, should double this year, and a multi-year period of share gains in a growing market has now likely commenced. We continue to face a variety of significant supply chain challenges. However, our execution is strong, and our guidance assumes the worst of the supply chain challenges from the Texas freeze will be experienced in the second quarter and improve as we progress through the second half of the year. Quinn Bolton rates the stock a buy, and his price target of $140 would be a 44.5% upside from current prices. Now let's see what the other analysts have to say. This one comes in as a moderate buy, based on 5 buys, 3 holds, and 1 sell, although it still has an average upside potential of 32%. On the high end, we have price targets of $145 from Rosenblatt Securities, which would be a nearly 50% upside potential. And on the low end, we do have a sell rating from Adam at Merrill Lynch, which still has a slight upside potential of nearly 3%. Now, last but certainly not least on our list today is COHU. Trading under the ticker COHU, they're currently priced at about $36 per share. And they come in with an outperform rating on the TipRanks top smart score, with some increased hedge fund activity, bullish blogger opinions, and very positive TipRanks investor sentiment. COHU is a semiconductor test and handling equipment supplier. They offer the broadest portfolio of equipment and services for back-end semiconductor manufacturing, including a one-stop shop for test and handling equipment, thermal subsystems, test contacting, vision inspection, and MEMS test solutions. Their enhanced product portfolio gives their customers the best possible combination of technologies to match their business and technical needs. Their product portfolio is focused on increasing yield, reducing cost of tests, and accelerating time to market. They are a global technology and market leader in a $6.5 billion semiconductor and PCB market. They have 41% recurring revenue and a 5-year revenue compound annual growth rate of 19%. COHU reported their latest quarterly earnings report on April 29th. They had record first quarter revenue of $225.5 million, which was up 11.4% quarter over quarter. They had earnings per share of 61 cents, which was 27% above what analysts forecasted. Their CEO said that COHU had a record first quarter orders and revenue with strength continuing across all major markets. Recurring business is benefiting from new semiconductor product designs, driving a 14% contactor revenue growth quarter over quarter. The systems business is experiencing robust automotive demand, driven by xEV and ADAS technologies and continued mobility expansions with 5G proliferation. We are proud to grow revenue and profitability while maintaining our commitment to reducing direct energy consumption and further improving our corporate ESG programs. It was 1 month ago now that Quinn Bolton gave the stock a buy rating with a $55 price target for an over 52% upside potential. Let's take a look at what the other analysts have to say. Now, this one just has 6 analyst ratings altogether and comes in as a strong buy based on 5 buy ratings and 1 hold. The average price target of $60 would be a 66% upside potential. On the low end, we have a hold rating with still a 22% upside, and on the high end, a $77 price target, which would be 113% growth from the current price. So there are our 3 tech stocks rated by the #1 tech analyst Quinn Bolton, along with some other 5-star analysts as well. Let me know your thoughts in the comments down below. Were any of these stocks on your radar? Are the ones that you're already invested in? Or just what do you think all around? I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it all the way to the end of the video here, make sure you hit that thumbs up button and check out Richard Allen's Power Hour at 3 p.m. Eastern Standard Time to catch up with all the other market news that's been going on throughout the day. Thank you guys so much for watching, and we will see you back here next time.